is that eventually central banks are going to own Bitcoin at an approximately 2.5% weight. That's very small compared to the gold allocations or the US dollar, which is like 2/3 of central bank reserves, and that Bitcoin will start to be used as a medium of exchange in global trade. At least for Bitcoin specifically, our conviction is it doesn't change too much depending on who's president. We're going to get a risk rally once we have a winner, right? And that could take some number of days or hopefully not weeks. But there's always a relief rally once we know for certain who's the winner. That should, extend to Bitcoin.
Matthew Sigel, head of digital asset research at VanEck, unveils the intricate dynamics of Bitcoin mining, the shifting tides of monetary policy, and the future of cryptocurrency. As we navigate this conversation, you'll discover how current economic trends are influencing Bitcoin's trajectory, the rise of public companies in mining, and what it all means for investors like you. Prepare to connect the dots and gain insights that could reshape your understanding of the digital asset landscape.
People are beginning to connect the dots on how our reckless monetary and fiscal policy plays into the debasement of money and allows the government to basically spend on a bunch of nothingness that doesn't make the economy more productive, but instead creates like alienation. And some of that alienation, finds its way into Bitcoin. And we did a piece a couple months ago with this kind of multi-million-dollar price target for Bitcoin, and the main gist of the piece is that eventually central banks are going to own Bitcoin at an approximately 2.5% weight. That's very small compared to the gold allocations or the US dollar, which is like 2/3 of central bank reserves, and that Bitcoin will start to be used as a medium of exchange in global trade, specifically for large ticket items like commodities. So I think that comment is just an acknowledgement that for the rest of the world in particular, there's strong demand for more consistent monetary policy. There's a lot of disillusionment with how the U.S. is exercising its foreign policy and how censorship of the dollar plays into that. U.S. sanctions are up 500% since 2009. So a lot of the world feels cut off. And what we did is we noticed that there's a very strong correlation between the value of a country's currency and its use in cross-border payments. And that there's also a correlation between the use in cross-border payments and the relative GDP growth of that country. I think it's going to be in the U.S.'s interest to forestall that, and Bitcoin would be the kind of the happy medium. So in that sense, many of the structural issues are baked into the cake, whoever wins this election. That's not to say I don't think there'll be a big difference in the performance of like Bitcoin versus certain altcoins, or the magnitude of the rally, say in the first 1 to 3 months after we know who the winner is. But at least for Bitcoin specifically, our conviction is it doesn't change too much depending on who's president. Yeah, so in the last cycle, 2020 cycle, Bitcoin dominance peaked at 70% right around the election. And then by the end of November 2020, it was down to 62%, and the altcoin rally was in full force. That happened obviously with a Democrat. Biden was elected, although you can argue that the market didn't really appreciate how hostile he was going to be, right? So I think my base case here is consensus, but we're going to get a risk rally once we have a winner, right? And that could take some number of days or hopefully not weeks. But there's always a relief rally once we know for certain the winner. That should, extend to Bitcoin. And then from my perspective, depending on the setup right into the election, whether it's been very weak markets or strong, altcoins may bounce, but their degree of outperformance will be much bigger under a Trump victory. And that's a situation where I would probably, make a move and change my positioning once the facts are clear that Trump is a winner. I mean, the guy owns 5 million plus of Ethereum. His wife gave an interview on Fox over the weekend to Maria Bartiromo, plugging her art, which has an NFT, on Solana. So she was really excited about her various NFT projects. I just think it's going to be much more wide open, and there'll be a hope trade for until the personnel of the new administration is known. Yeah, we're definitely noticing a pickup in global M2 and Chinese M2. As you probably know, Bitcoin is a chameleon. Its correlations with assets change over time, but the most persistent correlations are a negative correlation with the US dollar and a positive correlation with M2 and money supply growth. So those conditions seem to be well set. Problem is that Bitcoin's correlation with the NASDAQ right now is quite elevated. It's actually back to late 2022 levels. While I'm happy that Bitcoin joined the rally, right when China cut, allocators want to see that correlation come down. You may remember BlackRock when they first brought out the ETF. They said that they kind of delayed it internally because the period in 2022 really spooked them when the correlation between NASDAQ and Bitcoin was so elevated. That's not why allocators are buying it. They don't need just another risk-on asset. So in order to really kick off the parabolic stage of this rally, which, as you know, is it should be now, we need to see that correlation fall. The halving puts a focus on miners to make sure that they stay competitive, right? And I think that dynamism is important for the ecosystem. So what we saw post the halving, an initial boost in transactions and fees to try to capitalize from what people hoped would be a big price run up. When that didn't happen, the hash rate fell off by 15%, which was bang in line with what we kind of expected. You can see from the data that miners were selling coins post the halving for much of the summer, and that selling also coincided with some kind of one-off estate selling. The German government, the U.S. government, a couple of bankruptcy estates that had to sell coins to repay. So that, I think, really contributed to the divergence that we've seen between Bitcoin and gold, is one-off selling by miners who had to adapt to the halving, and then some idiosyncratic government and bankruptcy-related selling. Now that's behind us, and I think we're set up for a good catch-up. But yeah, I think that Satoshi set the halving schedule intentionally, putting it in election years when there is generally a lot of turnover in policy, when the young tend to take power from the old, and where, if you look at history, money supply growth is also better in elections. So it just by itself, the halving is not enough, but when you add in these other elements, it contributes to, I think, kind of a creative destruction in the space that removes the dead brush like a forest fire and then kind of sets us up for a sustainable rally. And if you look at the Bitcoin miners, they in September or August, started acquiring coins again. They basically had repaired their balance sheets from the post-halving disruption, and now they're selling less coins, or in some cases even accumulating coins. So I think the setup is pretty good here.
Let's take a moment to recap Matthew Sigel's key insights. According to him, we are witnessing a significant shift in how global monetary policies impact Bitcoin's trajectory, especially as central banks rethink their asset allocations. Sigel highlights the potential for Bitcoin to become a staple in central bank reserves, hinting at a future where Bitcoin could play a vital role in large-scale transactions, particularly in commodities trading. The connection between currency value and its use in cross-border payments paints a vivid picture of Bitcoin's relevance in a changing world. But there's more to this story. The dynamics of Bitcoin are constantly shifting. Its correlation with assets like the NASDAQ remains a critical point of observation. So, what lies ahead for Bitcoin and the broader crypto ecosystem? Stay tuned as we delve deeper into these insights, exploring what this means for investors and the future of digital currency.
Over the short term, a violent Bitcoin rally would, I think, change the complexion of which mining stocks are working, right? So for traders, if you think Bitcoin's going above 90K, which is basically the point at which the newer mining machines, you'd have like a 2-year payback. Right now, the payback on these newer mining machines at current BTC prices, 4 years. There's very little incentive to upgrade. The useful life of these things is 4 years. So it's not a bullish backdrop for pure play Bitcoin Bitcoin miners right now. And if you're looking at a multi-year investment through the cycle, you want a miner who has a low cost of capital so that they can actually afford to upgrade these machines. Because at 60K with a 4-year payback, none of them can really afford to do it. So how we think about it is diversifying the end market exposure, and most importantly, bringing down the cost of capital. All these miners have bad balance sheets, frankly, and they need to either sell equity to expand or issue debt. There's no appetite to fund a Bitcoin miner in the debt market because of what happened last cycle, where all the debt was written off and restructured, and a lot of bankruptcies in the space. Lenders will lend for project financing for Bitcoin miners, but that's very small scale. They are interested in lending against data center leases. So that's an opportunity to if you look at Bitcoin mining right now, you have, roughly 15 listed companies that control 30% of the hash rate, okay? That 30% is an all-time high. It was 20% a couple of years ago. So the listed universe has really taken share because of the lower cost of capital that is available to publicly traded companies. The other 70% of the market, well, you guys probably have some of the better data around on it, but it's very opaque. It's very hard to make a cost curve that commodity analysts make in the oil market, say, and try to figure out who's mining Bitcoin at a break-even rate of $80,000 right now. How much hash rate is operating at unprofitable levels? Very hard to tell. Some of these strategic miners, and I'm just throwing out names that are new to the market, like Kenya and Ethiopia, where there's so little transparency around what they're called. I mean, we know Ethiopia's built this huge hydro dam, $10 billion project. A bunch of Chinese miners came and hooked up. Electricity prices are low, but we don't have the transparency really of what the costs are for the government in mining.
As we wrap up, it's clear that the world of Bitcoin and cryptocurrency is anything but static. From the evolving strategies of miners to the profound impact of monetary policy, the insights shared today can guide your investment decisions in an unpredictable market, but this is just the beginning. Stay tuned for more expert analyses and market updates as we continue to explore the ever-changing digital landscape. Don't miss out on the chance to stay ahead of the curve.